Live from the Business RadioX studio inside Renaissance Bank, the bank that specializes in understanding you. It's time for North Fulton Business Radio.
And hello again, everyone. Welcome to another edition of North Fulton Business Radio. I'm John Ray, and folks, we are broadcasting from inside Renaissance Bank in beautiful Alpharetta. And if you haven't noticed, maybe in one of the recent issues of Forbes magazine, Renaissance was ranked in the top 10 of banks nationwide in a survey done by Forbes magazine. That's a pretty great honor. And I think the reason they got that honor is because of the way they do business. They've got all the products and services that you would expect from a bank for business owners, but they deliver all those products and services in a very personal way. And I know that personally. So if that's the kind of bank that you want to do business with and you're not getting that service right now, go to renaissancebank.com and find their local office and give them a call. And I think you'll be glad you did. Renaissance Bank, understanding you, member FDIC. Now I want to welcome Michael Cohen. Michael is with Synergy Financial. Michael, welcome.
Thank you. I appreciate it.
Hey, it's a pleasure to have you. You've got a good deep radio voice. I love it.
Well, back in the day, I was a DJ in college.
I was hoping you would bring that up. See, I prompted you there. But before we before we get into that, I want to just give you the opportunity to talk a little bit and introduce folks to Synergy Financial, and then we'll get into your background.
Okay. Synergy Financial Partners is part of the Alliance Group. So we're a broker under Alliance. Alliance has 35,000 agents, and we have the honor of being, within their group. Mm-hmm. The focus is taking care of people and protecting people. And then that's what we do by setting up proper insurances for what they need based upon a host of questions we ask them.
Gotcha. We'll get into that more in a second, but let's talk a little bit about you and your background. So you've got DJ in your background.
Oh yeah. So there's some music in my background. I don't play, but I was a DJ in my college radio station up in Oneonta, New York.
Oh wow.
A little town near Cooperstown.
Mm-hmm.
And I did a show called The Rock Shop, and of course it was in the 80s. So I got the first all these records that came out, all these hair bands and so on and so forth. But I always loved great vocalists and kind of in-depth music, kind of the progressive rock, some of that stuff. So yeah, I did that for a few years. It was fun. And then actually fast forward to 2001, I started promoting concerts as a side business.
Oh, really?
And I worked with some of the greatest guitar players in the world.
Wow.
A guy that a lot of people don't know, Joe Bonamassa, a blues guy.
Oh, yeah, I know that.
Joe?
Oh, yeah, wow. I mean, I don't know him personally, but I love his music. Wow.
Super, super, super nice guy.
Yeah.
And this is before he made it big. We did a little show in Decatur for a couple hundred people, and now he plays the Fox. So
yeah,
a handful of people in his caliber I've had the honor to work with.
Yeah.
So it was fun.
Wow.
Yeah.
That's awesome.
Yeah.
So what brought you to Atlanta?
Back in 1994, I lived in Long Island, and I don't know, there was just something about the energy and the in-your-face attitude. I didn't like it. I just got to the point, and I love the beach, and my family was there, and people said, "Why'd you leave?" I'm like, I just got to go. Sometimes you can't, you don't have the answers, and then a few years back, I finally realized it wasn't part of my personality.
Gotcha.
So when I moved down here, I went from people on top of one another, and I lived in an area called Hog Mountain, which is now Hamilton Mill, and the closest supermarket was at Pleasant Hill Road, like 20 minutes away. So I went from one extreme to the other. I went to the Hog Mountain Barbershop.
I love it.
And,
I love it.
That's been torn down since.
Yeah, sure. Yeah, that's great. Yeah. And you haven't looked back, obviously. It was a great decision coming here.
Yeah, I haven't. Mostly everybody's left, and most of them are in Florida, But, I haven't, honestly. I love it here. I'm in Cumming now, but in Cumming like 7 years. I love it here.
That's great. Yeah. That's great. So let's get into the work you do at Synergy Financial, and you've got a concept called life insurance with living benefits. Let's talk about that.
Yeah. So most people are familiar with a term policy. So let's say it's a 20-year term. It pays to your beneficiary if you die within that term. The thing is, about 2% of those policies actually pay out because you outlived the term.
Mm-hmm.
Now, the living benefits means you can use the policy while you're alive. There are 20 triggers. The heart attack, cancer, stroke, you get disabled, you could use it as a long-term care policy. Again, it's a term policy, but about 60% of those pay while you're alive because stuff happens, unfortunately. You could also have that same living benefits policy in a permanent policy called Index Universal Life with Living Benefits. And that's more of a savings plan. It grows tax-free like a Roth IRA. And it stays on an insurance chassis, so it's never subject to probate. So a lot of times we'll pair an Index Universal Life policy because the cost is more expensive with a regular term with living benefits where the cost of insurance is cheaper. And you can actually, on a 20-year term, you have 3 opportunities to make the Index Universal Life bigger with no physical. So it's a really good policy. As you make more money, you can dump more money into that. And we kind of pair those together if that's what somebody's looking for. But essentially, we go through what we call a dime. What is your debt? What is your income? What is your mortgage expense? And the education that you're going to, the education expenses for your children. And we go through a whole bunch of questions to find out what somebody needs.
Mm-hmm.
And, commissions and all the stuff that is secondary. This is what somebody needs. If you write a small term with living benefits for somebody who's in their 20s who just graduated school, it may cost them $20 or $30 a month, $35 a month. That's helping somebody.
Right.
As you can imagine, if it's a $300 a year premium, I make enough for a cup of coffee.
Mm-hmm.
So I really got into this to help protect people's wealth.
So would it be, I'm trying to come up with a way to put this that makes sense. Maybe it's just me, but maybe some of our listeners. Is this like a catastrophic savings account to somebody? Would that be maybe a way to look at it with a life insurance benefit?
Yeah, it could be because, it really is. That's why we get back into the wealth protection side of things.
Right. Because what you're describing is the way you would get those benefits while you're living has to do with some sort of catastrophic situation.
Yeah. Yeah. And unfortunately, I had these conversations with people and you mm-hmm. find out what's gone on in their life. And sometimes it's really shocking. And I had a case where this woman in her 40s is uninsurable. You'd never know if you met her. You'd never know. And she's got, some serious health issues.
Mm-hmm.
And the key is to get this while you're young and to get before something potentially happens. And I'm not trying to be doom and gloom, but there's so many crazy things that go on. I'm talking to my somebody I know, and he's 20 years old, and 2 days later he drops his motorcycle. He had no policy. We were actually talking about it like on a Monday, and on Wednesday, and he's lucky he's okay. But he got road burns, and road burns would pay, 20 or 25% of the policy. So if you had a $1 million policy, he could have got a check for 80 or 100 grand.
Mm.
And you don't think about these kind of, so motorcycle drivers.
Yeah.
I mean, a perfect client or really anybody. It's really out there to protect in case, as you mentioned, something catastrophic happens or even a mild heart attack pays out.
Mm-hmm.
But you need auto insurance, you need homeowners insurance, you need renter's insurance. You don't need living benefits. And it's super important.
And what age does it make sense to buy this policy? What age does not make sense?
That's a great question. So let's get back to the gentleman on the motorcycle. He's 20. He's in school, but he's got a business, so he's working full time. And Don Rice was the president of Synergy. We had this conversation. He goes, about 18 and up. As soon as you have some financial responsibility, and a policy is so cheap at that age. Mm-hmm. You can get even a couple $100,000 policy, but if you're working or if you're going to be paying for school yourself, that's when. So it could be 18 years old. If your parents are paying for it and you're not working, you don't really have any responsibility. As soon as you graduate and get a job, because now with rents, you've got rent, $1,500, $1,800 a month. And what happens if you get into a car wreck and you're out for 6 months? Who's going to pay your bills?
Right.
So at a very young age, it's important, and it's so cheap.
Folks, we're chatting here with Mike Cohen. Mike is he's an insurance and annuity specialist at Synergy Financial. Micah, what kind of what are some of the insurance companies that have this product? I mean, speak to the quality of those companies, I guess, is the question.
So, I mean, there's a lot of companies that have it. We typically write for National Life Group. I mean, that's our go-to. They've been around since, I think it's 1848. They paid on every claim. They actually are one of the first, if not the first, to create living benefits some years ago. We can underwrite a policy up to $2 million without a nurse coming to your home if you've got a pretty clean bill of health.
Oh, really?
Yeah. So, they're AAA rated company, and we feel very comfortable. There are other good companies, and we're independent, so we can write for anybody. If somebody's in a big risk category, and I'm working on one right now, where there's some risk involved, it's now gone to a senior underwriter, and if National Life doesn't write it, we may have to put them with a company called Foresters, who takes on higher risk. Obviously, the premiums go higher. So we have different companies for different situations.
Gotcha. So you're not tied into one particular company, which is great.
Yeah.
Talk about, you've got a policy that you advocate for some folks that grows tax-free and does not lose money.
Yeah. So there's a gentleman, an author out there his name is Patrick Kelly, and he's written Tax-Free Retirement, a host of books. And it's called an Index Universal Life Policy. It has living benefits, much like the term with living benefits. But it was originally set up for wealthy people, because if you make too much money, you can't contribute to a Roth IRA. There's certain limitations. So they use that as a vehicle, but we started with newborns or young children as a college fund, because it doesn't have to be used for college. It can be used for college or a down payment on a house, and it grows tax-free, just like a Roth does. So,
right.
You have to set it up in such a way where, and I don't want to get too complicated, it's all about the needs. So it grows tax-free. The key to that policy is obviously setting it up properly, sitting down with somebody you trust. But if you could, let's say, put $500 a month away in it, you want to set the monthly payment at less, and we call overfunding. When you overfund a policy like that, the overfunding goes towards savings and retirement. It doesn't go towards the cost of insurance or the commission somebody like myself would receive. So we'd rather write the permanent index universal life policy with less insurance, and we couple it with a living benefits policy, a term, which is much cheaper. And then you can actually, as you make more money, you can convert the term with living benefits into the permanent policy, and there's no physical. So if you unfortunately had a bad sickness, they have to write you at whatever they rated you at when you initially took out the product. So it's a really good product that you can really dump a lot of money into. And it's kind of the wealth protection side of things, because, you're not working with a certified financial planner where they're investing in stocks and mutual funds. This is whatever you want to safeguard. That's what this is set up for. And it's not subject to probate. So it can be good for doctors and people that are subject to potential malpractice, because it's on an insurance chassis. It's not an asset. They can't go after it. But if you never use it, it goes to your beneficiaries tax-free, and it just keeps, growing tax-free like a Roth.
Gotcha. And as with the insurance with living benefits, let's in this case talk about what kind of individual and situation is the best fit for this kind of policy?
For the regular?
For the one that grows tax-free.
Boy, again, as I mentioned, it was originally set up for the wealthy because you could dump $100,000 a month, $1 million a month. It's just tied to the amount of insurance. As long as they can write a giant amount of insurance, you could put a giant amount of money away. But we use it. We call it Head Start. We use it for children. So you put $25 a month away, $50, $100, $300, whatever you want to do. In lieu of a 520, I believe it's a 529C, which is a college fund. If you don't use it for college, there's a 10% penalty like there would be in a 401k if you pull it out before you're 59 and a half. So it really could be any age.
Oh, wow.
Yeah.
Okay.
Yeah. So a lot of people set it up for their grandbabies, or their children. We set one up recently. The children were at that time around 3 and 4, 3 and 5. And, they're putting money away in lieu of the one that has to be used for school.
Right.
And there's a little bit of insurance attached to it because it is an insurance product. But as they get older, they could just keep putting in, and it'll grow exponentially over time. And it can never lose money because it's a zero floor. So where the stock market has dropped so much in the last 6 months, that lost not a penny.
Yeah.
Might not have gained a penny, but it didn't lose a penny.
Sure. Now, you've got an annuity product that you think makes a lot of sense.
Yeah, so I'm licensed in life, health, and a particular fixed indexed annuity. And there's a nationwide product out there that is offering so let's rewind. Let's say you had $100,000 in a 401k and let's say there was a rebound in the market. You're like, I don't want to go through this again. And you move it from a 401k into this annuity. The particular annuity I'm talking about is a 12-year. So it's kind of a personal pension, or it's money you don't need tomorrow. And in a 401k, let's say you're 35 years old or 40, you can't touch it tomorrow anyway, or else you get a penalty. So we move it into the annuity, and there's no fee on the $100,000 that you move. They take a fee on the gains. So let's say right now, the way it's written or the way it's presented, it doubles whatever it gives you. So let's say, and it accredits every 3 years. So let's say it just averaged 5% for the last 3 years. It's the day for crediting. There's a 200% bonus. So they will take the 5% and move it to 10%. And they'll take a little bit less than 1% as a fee. So the 100,000 stays intact. The gains it gets doubles right now, and it's changed. It's the best it's ever been. It's a nationwide product. And then they take a little bit less than 1%. So you would net out, let's just round it to 9%. And it can never lose money. Again, it's a safeguard against the stock market. It's, we kind of use what we call the rule of 100, And if you're 50 years old, maybe 50% in the market and maybe 50% in an index universal life or a particular annuity like this. So it's a safeguard. But then again, you may be 50 years old or 40 or 30. And I'm talking to a 27-year-old. He goes, I want 90% of my money protected. Everybody's different. Me, I have too much money in the stock market. So I'm waiting like a lot of folks for it to
come back.
Yeah.
I got it.
And then a big annuity is in my future.
I get you.
Yeah.
I get you.
But there's a lot of annuities out there. This is the particular one that we use because we feel it's a very good product.
Okay.
And everybody knows nationwide too. So.
Oh yeah, for sure. So you've got you also work in health insurance as well.
Yeah. So when you get licensed, it's life, it's health, and then this particular annuity is kind of a all inclusive thing that you get involved with. You don't have to do the annuity; you go through the training and you get a specific license. So I've got all that, and the health insurance is much like the life insurance or anything else we advise folks on. There's Obamacare, which. If you're not making a lot of money and you get some subsidies, it could make sense. If you have pre-existing conditions, it could make a lot of sense because if you get into a major medical, there's a 1-year wait period. So, you have that, which is okay for a very small percentage of it's very expensive. So if you don't need it, you're better off either looking at a major medical and deciding what kind of deductible you're comfortable with, or what I actually have is a defined benefits plan, which is a lot less than major medical. So it's got a couple of gaps in it, but if you have a living benefits policy and an accident policy, you could kind of cobble together, if you're fairly healthy, you can cobble together a cheaper version of health insurance. So, but again, it's like anything else. We ask a lot of questions and we find out what their needs are. We find out what their budget is, and then we put them in what they absolutely need. And the process we go through with any of these products, it's multiple steps. Mm-hmm. It's a conversation, and then we'll ask a lot of questions, and then we're going to tell them to sleep on it, because these are big decisions.
Right.
If the trust is there, and hopefully I bring the trust because I do this to help people. I mean, mm-hmm. I've got 6 children. I protect my children. I love dogs. I've got 3 dogs. I've volunteered for adoption agents, dog adoption agencies and so forth. I've fostered and so on and so forth. Even rescued a 13-year-old dog. I met somebody at a truck stop in South Carolina a few years back.
Really? And
had that dog for about a year before it passed.
Wow.
It was the owner, she was in the military, got stationed in Germany, and the parents were too elderly to take care of it. So there I was with a dog in the back of my truck, and brought him home to meet my other dogs. So, but it's all about doing right by people and protecting people. That's why I got into this whole thing.
Yeah, I was going to ask you that, if you don't mind me inserting here, why this business for you, and what inspires you and keeps you motivated in this business? So,
I do a couple of different things like a lot of folks do. And, just a second, I've been in logistics for a long time, and I got into that on the consulting side to protect business owners from pricing and this and that and shenanigans that go on, and they go on in any industry, but I knew it, and I knew what to do, and I went in it to protect them. The same reason here, protecting businesses, now I'm protecting people, and you know what? Protecting somebody's wealth is super important, because even if you have $1 million, let's just say, and you don't have any living benefits, I got $1 million. That's great. But now all of a sudden you have a catastrophe, you have a heart attack, a level 4, a bypass surgery, and you're out of work for a year. You've got medical bills, you have a loss of income potentially. Now you're $1 million, and let's say you're not 59 and a half. Your $1 million is, most of it's wrapped up in a 401k. Maybe you have an emergency fund of maybe 3 months, or 10,000, 15, whatever you've got, if you even have it. A lot of people don't.
Right.
And you have no insurance. First you hit your emergency fund. Then you hit your credit cards, or you start to take penalties on your 401k. So it's number one cause of bankruptcy or health issues. So,
yeah.
And again, you can get these things, even somebody in their 50s or even 60 years old, it's expensive, but not super expensive. So it's a lot better to pull from that policy, because you can pull up to 90% from a living benefits policy while you're alive. Now, your beneficiaries aren't going to get as much, but you're trying to preserve your wealth.
Sure.
And keep your home. A lot of people call it mortgage protection insurance. That's just a fancy name to protect, the biggest investment you're ever going to make for most people, especially now, $4, $5, $6, $7, $800,000. The bank doesn't care, because the bank will just take the house.
Right.
They'll foreclose on the house.
Right.
So, yeah, I really got into it to protect people's wealth. And it's something that really, I know it's not mandatory, but it's important. I'll give you another scenario. So everybody knows the term policy. Hey, I got a 200 grand, 500, whatever I've got, $1 million. So when you get divorced, if you get divorced like I did, I had to get it. I was court ordered a term policy. And this is years ago. I didn't know anything about it. Like, okay, I got a term policy. It's to pay for child support if you die. Well, what if you get disabled? What if you have a heart attack, cancer, stroke, all that stuff? You can't pull from the policy. How are you going to pay child support?
Right.
So divorce attorneys and judges really need to know that just add the living benefits, only a few dollars more a month. Now you're really protecting the children. So just out there trying to educate
Yeah,
people. Yeah,
absolutely. Folks, Michael Cohen is with us. He is with Synergy Financial. Michael, this has been great. And I can't imagine there aren't some folks that want to be in touch. So let's tell them how they can do that.
Okay, so 2 ways to contact me. I'll give you my cell phone. It's 678-429-4787. Should I say it again? Or
sure, you can do that.
678-429-4787. Mm-hmm. Or you can email me at mcohen, that's MCOHEN, at synergyfinancial.com. mcohen at synergyfinancial.com. Text me, email me, call me. I'm here to help.
Awesome. Michael Cohen, folks, Synergy Financial. Mike, this has been great. Thanks so much for coming on.
I appreciate it so much.
Absolutely.
Thank you.
You're welcome.
Okay.
You're welcome. Hey, folks, just a thought for you. If you're looking for a better corporate team building idea than what you have that involves woods and mosquitoes and maybe a broken ankle or something like that, here's my suggestion is call Executive Chef Andrew Traub. He is with A&S Culinary Concepts on Jones Bridge Road in Johns Creek. Yes, they do corporate catering and Big Green Egg boot camps and a lot of terrific food that comes out of there. I know myself personally, but they also do corporate team building and you get to pitch in. Everyone gets to cook. And with guidance from Andrew and his team, and then you eat what you cook. What a great experience that is. So if you're looking for a better corporate team building experience, call 678-336-9196 and talk to Andrew. Tell him I sent you, or go to asculinaryconcepts.com. And folks, you can find our show on your favorite podcast app. North Fulton Business Radio is the search term. We would love it if you would subscribe and share the show. It's not about me or Business RadioX. It's about our great guests, business leaders like Michael who do great work, and we want their work to be found, particularly by those that need their services or products. So if you could help us in that regard by sharing the show with those that you know, we would greatly appreciate that. So for my guest, Michael Cohen, I'm John Ray. Join us next time here on North Fulton Business Radio.